The first thing I have to do. Okay. There we go.
I can see it's gonna be a long night. I ain't gonna stop until I get it right. I don't wanna sing no Jeremiah. I'd really love to say things just ain't that bad. Oh, how we love our denial, a comfort to cover up the shame. But the truth is standing on trial. There I've got proof that we're all to blame. Oh, my fellow Americans, are we reaping our harvest of greed? Have we built our house on sinking sand? Why are we being ugly Americans?
Good morning, April 1st. This is CJ Holmes, founder of Homeowners for Justice, host today for Weekdays Live. I'm working with some new systems, and so hopefully we'll be able to pull this off. Anyway, today, bank confiscation. I swear to you, the foreclosure crisis is just a symptom of the problem we've got. We have to pay attention to what is happening around the world with banks, with their confiscation, because that is their method of business right now. They are going to steal all the assets. That's what they've been doing in foreclosures. That's what they're going to start doing with bank accounts. And if you don't think it's going to happen here, watch out. So I'm going to bring you up to speed real quickly with some nice links that are going to be linked onto the comment section, of course, on the Weekday Live show. And then we're going to be talking about how the people are fighting back, the kinds of things that are happening. There's petitions, there's lawsuits. We're going to be having our go-to person on the show today. We're working on getting live folks on their webcams with us. So we hope that'll work. And we've got some questions and answers. I have to tell you again, I am absolutely, utterly swamped with questions, and they are all over the board. And I don't know all the answers. That's not my field of expertise. My field of expertise is getting us all together to work towards getting this solved. So we're going to have some expert talk about the answers to some of these questions, and maybe some of them can't be answered. But at least if we can't answer them today, we might be able to answer them tomorrow. And as we live stream them out, this is our consciousness coming out into the open, then we can get answers back. So let's start with bank theft. Right off the top. Here is a nice little article about how Cyprus has heavy losses for the major bank account holders. And the key with this particular article is that we're not talking about that 10% that the folks were having a real heart failure over just a couple of weeks ago. We're talking about 60% of savings to save the island from bankruptcy. Initial signs that big depositors and Bank of Cyprus would take a hit of 30 to 40%. I'm telling you, get your money out of the major banks. It turns out that the mattress might be a really good option. Here's another article. This is from Ellen Brown, Web of Debt. She's really insightful and is constantly coming up with what's going to happen and how can we stop it. And this is why we need to pay attention to whatever she writes. It says, she starts right out. She hits it nails on the head. Confiscating the customer deposits in Cyprus banks was not a one-off, desperate idea of a few Eurozone officials scrambling to salvage their balance sheets. A joint paper by the U.S. Federal Deposit Insurance Corp and Bank of England in December last year, that's about 4 months ago, shows that these plans have long been in the making. They originated the G20 Financial Stability Board in Basel, and that result will be to deliver clear title to the banks of depositor funds. They're going to take the money. That is the answer. We need to protect ourselves.
We're going to continue our conversation about Europe and Cyprus with none other than the father of the euro, Dr. Robert Mundell. Over the weekend, he sat down with my surveillance co-anchor, Sarah Eisen. And Sarah, you caught up with Dr. Mundell. What did he have to say about this unprecedented situation?
Number one concern of Robert Mundell's is contagion. He doesn't buy this idea that Cyprus is such a tiny economy and therefore it doesn't matter. Because bottom line, if it can happen there, it can happen anywhere. And I asked him what his biggest fear was, and he said Italy as the potential next domino to fall. Besides, when it comes to Cyprus, it doesn't cost them that much, and it's far too important. Listen.
I think Cyprus is too small to fail.
What does that mean?
I mean, the size of it is a very small part of the euro, small, so small compared to Greece even, that it's just worth fixing up the problem and making the funds available. The total funds available is going to be a very small part of the total stability fund.
You would warn against letting them leave.
I think that there is nothing to be gained by letting them leave. And of course, it would be, I think, a big political mistake also. Cyprus is an enormously important strategic area that in a very troubling part of the world, and I think it would be a disastrous mistake to let Cyprus leave.
And Scarlett, his main message there to the Cypriot people on this day, when perhaps they're feeling angry about being forced by the Europeans and the international lenders about shrinking their banking system and hurting their economy, you're better off with it, because a bank failure would have a devastating impact on the economy. And he also was very unhappy about that original plan to tax deposits. Is probably glad that they didn't go through on that end.
Well, you also talked about the ECB. Yeah. Is he critical of what they're doing?
Absolutely, and this is unusual. He said that they're making the crisis worse because they're letting the euro get too strong. He says it'll do wonders to help the European economy to have a weaker euro right now. As you can see, the euro has shot up to 137. He said that was an absolute mistake. It's just mind-boggling, literally, is his direct quote, that Mario Draghi could let the euro get so strong. And so you're seeing the euro weaken today substantially as a result of the Cypriot contagion, which isn't a good thing, but perhaps for the European economy, which is the broader picture here and what they're going to have to deal with after they settle these crises and come up with last-minute bailout decisions, a weaker euro certainly helps.
Oh, that's great. Yeah, let's ruin the currency, which is what they're doing. This is a fairly state-set system. This is what they're going to be doing.
Here's a look at our top headlines right now at the bottom of the hour. Manufacturing in the U.S. expanding less than forecast in March as factories.
Excuse me. All right.
We'll kick it off with the markets. It's the last day of the quarter. The S&P hitting that all-time record high. April has been the best performing month of the year since 1950. Are we ready for another leg up in the markets? Jim Rogers is the chairman of Rogers Holdings, and he joins us this morning, I believe, on the Newsline. Jim, good morning.
I'm delighted to be here, Carl. How are you?
I'm pretty good. Finally got this albatross out of the way in terms of these technical levels. A lot of bears argue good reasons not to participate in Q2. What do you think?
Well, it is very artificial, I must say. If you give me $1 trillion, Carl, I'll show you a good time, too. And a lot of people are having a good time. I'm somewhat skeptical because I know it's going to end badly.
Let's center on U.S. People point to typical seasonality, not that great going into the springtime. Big components like GE diverging from the broader index. Cyprus, even though near-term uncertainty might be lifted, still a lot of questions about Italy and bank deposits. Would your preference be to stay stateside or not?
Well, no, I'm not. I'm certainly not investing in the U.S. because the U.S. is making all-time highs based on, money printing. As far as I'm concerned, I'd rather put my money. I have money. I bought Russia recently. Russia's certainly not near an all-time high, Carl. Japan I own. Japan is not near an all-time high. The whole world's benefiting from all this money being printed, but there are better places than the all-time high, if you ask me.
Yeah. What's your appetite on Europe at these levels?
No, I'm not. I own Swiss francs. I own a few shares in Europe that I've owned for 15 or 20 years. But no, I'm certainly not buying there. I mean, it's pretty scary what's going on in Europe when they start taking money out of people's bank accounts. I, for one, am making sure I don't have too much money in any single bank account anywhere in the world now, because now there's a precedent, Carl. The IMF has said, sure, loot the bank accounts. EU has said loot the bank accounts, so you can be sure that other countries, when the problems come, are going to say, well, it's condoned by the EU, it's condoned by the IMF, let's do it too.
Have you personally made moves, Jim, where you were a large depositor and you said, get me under the insurance cap?
Well, I'm not rich enough to be a large depositor anywhere, Carl. I'm not like you. But yes, I have started the process in a couple of countries in Europe already. It's underway to make sure that I have under the guarantee amount. And everybody should do the same thing too, because they're going to go like crazy the next time around.
Yeah. Now, there is this discussion that we've had this week, obviously, about whether or not this is truly a template, as the Dutch say. They've tried to walk that back, Jim. What do you think is true? I mean, is Cyprus a special case, or might we expect a similar strategy to take effect in a larger country, if need be?
It's going to happen. Of course it's going to happen, Carl. Now the IMF has condoned it. The EU's condoned it. I mean, it's politicians who are telling you it's a special case. Oh, don't worry, don't worry, don't worry. Carl, what more do you need to know when politicians are saying you don't have to worry, it's a special case? Please, you better hurry. You better run for the hills. I'm doing it anyway. I don't mean I'm right, but I want to make sure that I don't get trapped. I mean, think of all the poor souls who just thought they had a simple bank account. Now they find out that they are making a contribution. That's what it's called, Carl, a contribution to the stability of Cyprus.
Yeah.
I mean, it's all of these politicians.
Yeah. Rule number one, Jim, they say, is don't lose money. Rule number two is look back at rule number one. Finally, you're...
well, rule number three is don't trust the politicians. Don't trust any government. Carl, if you're going to listen to governments, you're going to go bankrupt very quickly.
Finally, Jim, I know one of your other areas of focus is ag. Can you be a little more specific?
Well, agriculture has been a disaster. We've produced less than we've consumed for 10 years now, which means inventories are near historic lows. We've got very low inventories. We're running out of farmers. The average age of farmers in America is 58. In Japan, it's 66. I mean, farming's been a disaster for 30 years. Prices have to go much higher. Maybe not this year, but certainly this decade, or we're not going to have any food at any price, Carl. There aren't enough. You know anybody who became a farmer? Probably not.
They're making a lot fewer of them in this country, at least, that's for sure. And we just got a taste of it with that drought not too long ago. Jim, have a great time in Chile, I believe is where you are. And thanks for coming to the phone. We'll talk soon.
Thank you, Carl. Bye-bye.
Jim Rogers, chairman of Rogers Holding.
Okay, that's just a little bit scary. He's actually saying we don't have enough food. There won't be any food for any price. These are very troubling words, and they're laughing about it or really not addressing what this could actually be like. But we need to think about this, and we need to talk about this. These are major issues. He said for sure it's going to end badly. He's not going to invest in the U.S. because it's an all-time high because we're just printing paper, which we're going to talk about, and we know. They're going to loot the bank accounts. They already are, and this is a template. And next time they're going to do it way faster. It's going to be happening just like that. I tell you, you got to move the money, and I'm looking for feedback from people on it. We're going to try to keep the homes. That's the focus here. But we also need to keep whatever wealth that we've got, whatever cash we've got. He said then rule number 3, he's making up a rule number 3. You know, 1 was don't lose money. 2 is look at rule number 1. 3 is don't trust any politicians. If you do, you'll be bankrupt. I think he's just really right on, and it's word to the wise. Let's us pay attention. Now, I wanted to play this little scenario here. This is truly talking about if we don't keep expanding the money supply, would be in a depression.
A death spiral that could end civilization. A death spiral that could end civilization as we know it. Those harsh words were used by former World Bank economist Richard Duncan to describe the path the U.S. economy could take if major changes don't happen, and fast. Here's what he said on CNBC over the weekend.
If they don't prevent the credit supply from contracting, then we will have a new depression. So the policy is to ensure that credit continues to expand. And now that's what government debt is doing. The increase in government debt is making total debt grow. Otherwise, we would have already collapsed into a debt deflation death spiral.
And Duncan is not alone in his fears. Experts, including former Reagan administration economists Lawrence Kotlikoff and Dr. Kurt Moores, agree. And yet, little is being done to reverse this trend, let alone acknowledge it. Here to help me get to the root of the problem and offer possible solutions, Peter Schiff, the CEO of Euro-Pacific Capital Incorporated. Hey there, Peter. Thanks for joining me. Now, as I mentioned, Richard Duncan calls this federal debt a death spiral. Is this accurate or is it an exaggeration?
Well, I don't think he's exaggerating. You know, for years I think I was more bearish than Richard Duncan. Maybe he's trying to out-bearish me at this point. But, you know, we are definitely headed for a real economic crisis in the United States. What happened in 2008 was just the opening act. I mean, the main event is still coming, and the debt is every much a part of it. You know, how it's going to be unwound. Is it going to be a currency crisis where the dollar collapses because we print all this money because we don't want to default and we can't pay, or will it be some kind of combination of inflation and default? But either way, the chickens are going to come home. The U.S. is going to be held accountable for trillions of dollars that we've borrowed and spent, and we are simply unable to pay it back. And we've created an economy, a phony economy, that is completely dependent on the ability to keep borrowing more money that we can't pay back.
Now, you did say that part of the problem is our debt. Is it really the debt or the persistent unemployment that's the root of our economic woes at this point?
Well, one of the reasons that we have so much debt is because we have a lot of unemployed people. And of course, we have a lot of people who are employed in non-productive ways. That's also part of the problem. That's why we have such a large trade deficit. But a lot of this is the fault of the central government, the Federal Reserve, that are micromanaging our economy from Washington. And the whole thing is screwed up. They are focusing our resources where they shouldn't be, whether it's housing, education, healthcare, banking, retail, and those resources are being diverted from where they need to be. So we have this phony economy that can't create productive jobs, that is dependent on the Fed printing, on borrowing, on trade deficits. But we can't do this forever, and the longer we do it, the bigger disaster when it ends.
But Peter, of the last 46 of the last 50 years, excuse me, our country has been in this kind of budget deficit, and we haven't gotten caught in a death spiral. So why now? What is really getting at this problem?
Well, not yet. But it's the enormity of the problem. It starts off as a small problem. It's like, you know, you can get cancer, but you don't die right away. You have to wait until the disease grows to the point that it kills you. And, you know, our debt was a cancer, but it's taken a long time for the disease to progress. And I guess it's not fatal at this very second, but we're really close to it. If you look at the size of the debt, you know, the government is forecasting that interest payments on the national debt in 2013 are going to be $228 billion. The last time we had an interest rate bill that low, Ronald Reagan was the president, and the national debt was $2 trillion something. So what's keeping it going is the Fed. If we had to pay a real rate of interest on our debt right now, there is no way we can afford it.
I've also heard of the economy.
I'm going to stop her right there because the bottom line is she did not pick up on what he just said. She runs off on her next question, and you can watch the rest of the video yourself. The issue is, did you hear what he said? I want to focus on this. The reason the Fed keeps the interest rate low, here's a glaring reason. He said if we had to pay a real interest rate, a true interest rate on the debt, we couldn't do it. We'd have to default. And the Fed knows that. And that's why they're keeping the interest rates low. And by artificially keeping them low and pushing trillions of dollars out to the banks to wash away the fraudulent foreclosures and all the mortgage-backed securities, 85 billion a month kind of number. And it will gradually, it already is. You and I already feel it. We're already paying more for gas and food, and you go to the store and you go, what? And that is the effects of inflation. And of course, every time they don't want to have you know what the inflation is, then they stop talking about that number. This is a classic picture. I'm working on connecting with some other foreclosure defense attorneys all around the country. There's some really good ones out there working. We're getting them on the phone, emailing them, trying to get them on the show, at least for an update Friday. And this happens to be just one chart I've pulled out of this little link for Bill Butler. He's up in Minnesota. And I'm telling you, he's just explaining, very good explanation, by the way, of, what they did and how the securitization works and stuff like that. But this chart struck me because it deals with the money supply. It's called M3 money stock. And the Fed stopped printing this chart because what happened, look at, this is the credit cards. This is the credit and the volume of M3 money in our society. And in 06, you can expect that this line started going like that. It started going straight up. How do you get $16 trillion from $2 trillion in just, a few years? Whoop! And so literally that is the government's answer. That is why if you believe the politicians, you'll go broke, because they lie, lie, lie. And so the money supply has just mushroomed. You can't have what Neil Garfield said last week was 1.2 quadrillion. The number just is a laughable number. It makes me laugh because it's so stupid, of derivatives in existence without the money supply just blowing up. That is the point. I just wanted to bring that chart to your attention. And the fact is, another thing that really irks me is the unemployment number. Unemployment is down. Why? Because they don't count all the people that have lost a job. Just think about who they don't count. They don't count people that are off unemployment and can't find work. They don't count all the small business owners that have been crucified in the downturn in the economy. They weren't employed, they were business owners, so they don't count. It is just amazing that they are telling us when probably we have unemployment of probably 15, 20, 30% in some areas, and they're saying it's down to 6 or 7%. It is just a bald-faced lie. And they manipulate the statistics. This is another thing I wanted to bring to your attention. Why ordinary Americans should be really angry. And this was printed earlier this month, in March this year. But this refers to a meeting in 2009. So think about this. And this is another reason why we're so outraged, is that these issues were definitely brought out and addressed. Here you have Elizabeth Warren back in 09, 10, 11, 12, 4 years ago. About 2 years after this, 1 year after the crash of Lehman Brothers and Wall Street, but 2 years after we really started to feel a downturn in the economy. And she's pushing Timothy Geithner, saying about TARP. They're asking about why isn't HAMP working? What is going on? And finally, Geithner blurts out, we estimate that the banks can handle 10 million foreclosures over time. So So you got the Treasury Secretary answering as a bank spokesperson. And so the program, HAMP, would foam the runway for the banks. The expression foam the runway is often used to refer to injecting cash into a company that's about to go bankrupt, which is somewhat similar in principle to an airport spreading foam on the runway for a plane that's going to crash, an emergency landing. What Geithner was actually saying here was that home mortgage modifications, any help for the people, is really meant to be helping the banks by just preventing likely foreclosures from hitting the banking system at precisely all the same time. What would we do, God forbid, if everybody was foreclosed at once? We couldn't possibly handle it. The banks would go bankrupt. So I got an idea. We'll put a little government program together. We'll bait these owners. We'll stretch them out. It'll give all the banks a good excuse. We don't have to worry about it because they're working on the HAMP thing. And of course, we'll lose the paperwork. We'll deny them eventually. And eventually, when we're ready to, take more foreclosures in our portfolio, then we'll do that. And that's exactly what HAMP was meant for. So here's another reason. And if you had any doubt whatsoever of why loan modifications don't really work, it's because they were never meant to work. They were simply meant as a bank bailout. And here we have the truth of the matter. Everything is about the banks. It's the bank and government cartel. They are together, and if we think any differently, we need to get disabused of that idea. And also, the people, the owners, we are not deadbeats. The owners are not deadbeats. The owners are the victims. They're the victims of fraudulent toxic loans, the victims of fraudulent bank loan modification attempts, even the government programs. It is an arm-in-arm conspiracy between the government and the banks to save the banks. And next, they're going to start taking your money out of your checking and savings accounts. You got to listen to this. This is a fabulous short little video. It's about another one of our champions, Marcy Kaptur, in the House of Representatives Federal. This was done in 2011, December 2011, just shortly after Occupy started. Occupy started in about August, September 2011. Marcy goes on the floor of the House, and this is what she's saying.
The chair recognizes the gentlelady from California. The chair recognizes the gentlelady from California. Sorry, we have the order wrong here. I'll repeat that. The chair recognizes the gentlelady from Ohio, Ms. Kaptur, for 5 minutes.
I thank the gentleman from Ohio. Mr. Speaker.
I apologize to Mike Blake.
Numerous stories have come out during the last few weeks, all detailing corruption and outright fraud on Wall Street. First, there was the recent news about the former Secretary of Treasury, Hank Paulson, inappropriately tipping a few key friends from Goldman Sachs and other Wall Street tycoons about the impending collapse of Fannie Mae and Freddie Mac, so those friends could make money on that insider knowledge. Then, a federal judge in New York threw out one of the orchestrated settlements between Citigroup, which was at the center of the wrongdoing, and the Securities and Exchange Commission that allowed that bank to walk away from cases of fraud without admitting any wrongdoing. This past weekend, 60 Minutes interviewed a former executive vice president at Countrywide Financial, a giant and duplicitous player in the U.S. mortgage business. This woman was in charge of fraud investigations at the company before the financial crisis. According to her, Countrywide loan officers were forging and manipulating borrowers' income and asset statements to help them get loans they weren't qualified for and couldn't afford. She went on to say all of the recycle bins, wherever we looked in that company, were full of signatures that had been cut off of one document and put onto another and then photocopied or faxed. According to her, the fraud she witnessed was systemic, taking place in Boston, Chicago, Miami, Detroit, Las Vegas, Phoenix, and elsewhere. She was fired before she could speak to government regulators about the extent of fraud she had documented. What is most troubling is that these stories are not isolated. The FBI testified before Congress as early as 2004 that they were seeing an epidemic in white-collar crime, They stated the FBI did not have anywhere near enough agents to investigate the financial crisis. There are moments when I do wonder if the FBI has the will to prosecute, but still today the FBI has nowhere near enough special agents or forensic experts to properly investigate the level of corruption that we know occurred. Frankly, the Congress has shorted the FBI, some might say purposefully, of the resources they need to do the job. I have a bill, and I invite my colleagues to support H.R. 3050, the Financial Crisis Criminal Investigation Act, authorizing an additional 1,000 FBI agents to aggressively investigate the kind of fraud that has destroyed the economic future of millions of our people and upset the global financial system. Back when we had the S&L crisis in the 1990s, we had 1,000 agents. You know how many there were working when this started? 45. 45. We're only up a little over 200. Think about that, America. Why do you think these people aren't in jail? Frankly, this Congress has not taken its responsibility seriously. Despite robust public reporting of misdeeds on Wall Street, it was not until the MF Global case, one of the top 10 bankruptcies in this country, that Congress has shown some mild interest in the magnitude of the inquiry required. In November, we got an inside look into the stunning misdeeds and, let's be blunt, outright thievery that occurred at MF Global in the days before it declared bankruptcy. The total amount missing from private accounts has fluctuated over the weeks. As much as $1.2 billion could be missing from private customer accounts. Congress is finally having hearings on this subject tomorrow, and we'll see how seriously investigation is pursued. Let me say the public has a right to know on what specific dates throughout 2011 money from customer accounts was wire transferred in order to meet MF Global's margin calls. This is the key question. Members should ask, probe, and exact the truth. The public has a right to know on what specific dates through 2011 was money from private customer accounts at MF wire transferred in order to meet MF's global margin calls. If Mr. Corzine authorized the taking of those funds, then this body should remind him that no one is above the law, not even someone who is a former Goldman Sachs CEO, former governor, and U.S. senator. Whichever friends and associates aided his actions in that company should be brought into full sunlight, as well as other companies that were likely involved in those wire transfers. The fact that hundreds of millions of dollars, if not over $1 billion, can simply be stolen from a major banking institution from the inside requires full investigation, not just by the Congress, but by the FBI. I'm reminded of that book written by Professor William Black, The Best Way to Rob a Bank is to Own One. Well, I wonder how much of that applies in this case. It's time that Wall Street white-collar crimes be prosecuted seriously, that this Congress do its job, give the FBI the resources it needs to fully investigate and prosecute, and the committees of this chamber use their full authority to do no less. Mr. Speaker, I yield back my remaining time.
The gentlelady yields back.
So here's the question. Here's the point. The banks already stole private monies. This was in 2011. She's talking about the MF Global fiasco, and I don't even know how that worked out. If you know how that worked out, let me know. Did they ever prosecute anybody? Probably not. So this is a bank routine response. It's the banks against the people. The banks control the money. You have your account there, they'll just take it. This is not surprising, and it's really good for us to be reminded. This is historical. This is the pattern. It's just like I've talked about the pattern of their wholly owned subsidiaries and corporations, and they play the corporate shell game. And, you know, this corporation sounds like another name like Nation Star, but it's a wholly owned subsidiary. Ocwen's a wholly owned subsidiary of Bank of America. Recon Trust, wholly owned subsidiary. So you have all these shell corporations that the banks manipulate. And then, of course, they're going to just get the legislators and the officials, Geithner, Bernanke, to allow them to just confiscate, make a contribution of your bank deposits. Pretty amazing. So the people are fighting back. So what are we doing? Well, here's some things that we're doing, and then we're going to get on with a few questions, get some answers today for some of the myriad of questions that come into my mailbox. Here in Washington State, we have J.P. Morgan Chase. Well, it says beaten. I wouldn't think I'd say beaten, but the fact is the lawsuit is allowed to continue. Sort of like what we're hearing from Lorraine and others that we've been following their action. They're not out of the game yet, so that's a good thing. And in this case, the complaints, violation of the FDCPA, incomplete endorsement chain of title, and violations of the Washington State Deed of Trust Act. And the judge has given her cause of action against the defendant's motion to dismiss. So you can read through this article. We can glean from it what we can. It's not over. Individuals are still in the battle. Occasionally there's a win. So people are still fighting back. Here's a petition that has come out. This is about the Consumer Financial Protection Bureau. And here in the statement, the petition statement, it talks about, obviously, the CFPB was created to address the huge problem of abusive and deceptive banking and lending. And it's an organization that we as owners have been able to file complaints with against bank servicers. If they're not under the auspices of the OCC, then they are under the auspices of the CFPB. And here they're talking about Director Cordray is trying to be appointed, and people are fighting back. And this is being written to help push through his nomination to serve a full term. His leadership has won praise from both Republicans and Democrats and bankers and consumer advocates. And yet, for 2 years, a group of senators has held his appointment hostage. Now, pretty interesting. It'd be a fascinating study. I'm sure somebody listening can do that for us. And that is, are those senators bought off by the banks? Why are they stopping this appointment? That would be very interesting. So the petition, I've promised before, I'm going to set up a petition page. I will set up a petition page and put these petitions on that page. So instead of trying to remember where the link is in your email, which, you know, like in my case, just becomes almost impossible to find, then you can just go to the page at Homeowners for Justice and click on these petitions. Here's something else that is being fought back. Here's a Washington law firm. I just got this link this morning, 2 links. Here's the law firm article about it. They're filing against the OCC. And this article is speculating that they won't name the client. And so they're guessing that it might be possible that a consulting firm that lost out on the review contracts is behind the lawsuit. We don't really know, but it is a lawsuit in federal court against the Office of the Comptroller of the Currency, the OCC, and they're seeking documents explaining how the OCC defined independent in its requirements for mortgage servicers to hire independent consultants to conduct the reviews. As has been well documented, the auditors got lots and lots of money. It was a windfall. The owners, the subject of the independent review that was supposed to give damages to owners that were harmed, you know, they basically got virtually nothing. So another lawsuit, and then here's the link that you can use to go look at the case itself. This is a link, and they filed this March 27, 2013. So these are very current, up-to-date lawsuits. Williams and Connolly LLP, they sue the Office of the Comptroller of the Currency. I'm sure we'll be having more information about that, but I wanted to bring that to your attention, that people are petitioning, filing lawsuits, and trying to get more expert information from each other as we share the answers and as I bring people on the show. So I'd like you to welcome Linda again back to our show. She's hopefully going to be here with us shortly. And there she is. Hi, Linda. Thank you.
Hi, good morning.
Good morning. Now, what I would like to do is welcome you again to the show. Thank you so much for taking time out of your day. I know that your day is as full as mine, stuffed with issues and effort to survive, to help people, other people to survive and to figure out the answers to their questions. So I've got some questions that I've put on the overheads, and the very next one I would like to start with is question number 1. Here it says, some person writes in, this is from my mailbox, and they said they refinanced into a subprime loan in December 2005. They tried to modify the loan, and they applied at that time for whatever they called the Obama House program, whatever that was. I'm not familiar with it. They were foreclosed in November 2010. They filed a lawsuit against Wells Fargo that same month. Obviously they lost. UD is unlawful detainer, ordered them out January 2013, so just 2 months ago. And then the bank sold their home to a third party in February, just a couple months ago. How does this person get any remedy, or can they? And what other issues should they address? Those are the basic questions. So here you go, Linda. What do you say to that?
First of all, it looks like it's a California foreclosure because you have the unlawful detainer.
Probably so.
You can't just go in and get remedies. First of all, you have to prove that there was something done wrong. And as Neil Garfield says, that sometimes we have to go through the actual foreclosure to identify the real parties in interest. So first thing, they would have to look at, was the foreclosure done according to the state law, if it was California, the proper procedure. Find out who the parties were named and find out where the home actually did go when it was foreclosed, who was it titled to. These issues then, if they have access to someone who could teach them how to do it, if not, to find an attorney, which you and I are trying to find attorneys to help people in this situation.
Absolutely. Absolutely. Because these are valid complaints. They are complicated questions. And Linda, thank you so much, because that is a standard answer that everyone's going to have to step up and do once they finally lose their home. If you want to fight back, then what's also really interesting, and tell me if I'm right, Linda, and that is when the house sells, that's when you can actually see some money transfer, correct?
Yes, and that's when you see who it gets assigned to or titled to, and it might be surprising, just to be able to get those documents and see that it's not who you thought it was. Right.
Exactly. And so that strikes me the same as in the wire transfers at escrow. When you buy, we just talked about that last week about getting wire transfers of that escrow that were sent, how the money was and from whom the money was sent to escrow to fund the loan. So what we talked about yesterday or Friday, Joe brought up an example and started talking about that, sharing with us that the lender on all the documents was Countrywide, but the wire transfer was like Bank of New York. And all the money that might have been left over, they may have sent a little more. So if there's any to send back, it gets sent back to Bank of New York, not Countrywide. So Linda, just in that, a question that came up in my mind, just in that little rehash of what we just saw last week. Does that mean that a person could take that evidence and go into court and say, Countrywide was not my lender, it was Bank of New York?
Right, and in this case, we don't know if Wells Fargo was the original lender. I've run across a lot that were World Savings, and then through the sales, Wells Fargo was foreclosing on them, and we know that they had no standing. That it was securitized back when World Savings acquired the loans. So there's a lot of issues and discovery that, first of all, this party should get together all the closing documents that they were supplied and all the foreclosure documents and also what was filed in the county, because they might not have received everything that was filed.
Correct. Oh, right. So they need to get all of their own closing documents. And what Joe mentioned on Friday, and he was talking about some bank auditor, some guy that used to work for banks, had stopped working for banks and was now working to help evidently discover chain of title or audit. I don't remember well what that was about. I do remember this, that Joe had gone and gotten all of the documents from the recorder's office, and yet this guy said, well, there was an assignment. And Joe says, what do you mean there's an assignment? Well, there was an assignment form filled out in the folder at the bank level in that file, but they had never recorded at the recorder's office. And so, and the bank guy thought that that was a valid assignment, where obviously legally we know it isn't because it wasn't recorded. So
again, the issue that you brought up with the actual documents and the suspected forgery of documents and suspected signatures, that carries another issue. Speaking to an attorney who's an expert in securitization, the documents involved with the transfers and securitization, if there is fraud there, that's automatically void, not voidable. So what you're doing is very pivotal and important to the basis of fighting in California.
And that would be fighting then in every non-judicial state, correct? It would be a deed of trust type state.
Right.
Because California is not totally unique. We just happen to be a non-judicial state, and there's, about half the states are non-judicial and about half the states are judicial. 33 judicial and something like that, 28 non, something like that. And so Florida and New York are both judicial. So you and Charles Walshing, we had on last week, you're both in judicial states. We're in non-judicial. However, I believe that the arguments are very similar because it's all about the assignments. It's all about the authority to foreclose, right?
It's approaching the issues from a different direction to get to the point of challenging standing.
Right. Okay, next question. This person writes into me, I have a copy of the original notarized deed of trust. I have a copy of the notarized trustee's deed on sale. That would be what we just talked about on the previous question. When the house goes to auction and it's foreclosed on, then this is a trustee's deed of sale, and so they have a copy of that, and it's notarized. And that is what Linda was talking about. Let's look at who is now the actual owner. Let's follow the money with the wire transfers if possible to see who actually got that money. So now this person's question, they're trying to get the wire transfers from their loan purchase when they purchased the house. And so their original trustee is Tycor Title, and the trustee on the trustee's deed is Quality Loan Services. But he can't locate any connecting links of substitutions between the trustees. So he went to the recorder's office, and the people were very helpful, but it was no help. So it makes it sound to me, he wants to know what suggestions we have. So Linda, it sounds to me as if on this question, they never recorded a trustee substitution.
Yes, it looks like that. And if I know some California residents who have gotten a statement from their recorder's office that there is no substitution of trustee on file, so that they have that when they go to court or when they challenge this. And another helpful issue who has much more knowledge on the chain and the tracing of it at the closing, I would suggest they contact Charles Coppa.
Okay. And here's another point I want to bring up, that California law, I know this for a statute fact, I'll hunt for it while Linda's answering the next question, because I forget exactly what number it is, but it's about the trustee substitutions. And a trustee substitution, it is legal, even if it's filed after a notice of default or even after a notice of sale. So in other words, if we looked at these recorded documents, and on the deed of trust, it was Tycor Title, and then Quality Loan Services came in and filed notice of default, which is probably what they did. And then, I don't even know which property address this is. I could look this up. But then let's say that Quality Loan Services filed a notice of sale, which they probably did. And then they sold it with no trustee substitution from Tycor to Quality Loan. That entire foreclosure is void. The trustee substitution in California doesn't have to be filed before the notice of default, but it must be filed before the sale. If it's sold, if Quality Loan Services sold that, then that is a complete fraudulent void sale. Now, doesn't mean that you can get it back automatically, and that's the trouble, right, Linda? We have to be filing lawsuits.
Yes, because who do you speak to? You call the foreclosing trustee, maybe speak to their legal office, but who do you speak to get it stopped? And it's also hooked up with an unlawful detainer, so you've got two fields to fight there at one time.
Yeah, assuming this was UD.
I wanted to point out, because in the comments on the side, they were been talking about companies that no longer exist. I've been working with a gentleman who his original lender no longer exists. However, in researching on the internet, I was able to find a connection. There was an office set up to deal with issues of the no longer existing parties. So that might be something for everyone who their original entities are no longer existing. Find out if there still is in existence an office that is dealing with issues to close out all their accounts and get certified copies directly from that entity.
That's a really great idea. I hope you guys made notes of that. Okay, next question. Let's see what's coming next. Okay, this is somebody who has followed our little workshop about going to the SEC via Google, secinfo.com. And they're looking for their securitized loan, which closed in June 2007. They found a trust from August 2007, but how can they be sure it's theirs? And also, they're referring now to Lorraine Souders, who has been on the show and mentioned that her loan was in the trust, was paid off by insurance. And so they have a couple of questions. How do they know that the loan they found or the trust they found would contain their loan? And then does that mean if it was paid off with insurance, was that the whole loan that was paid off or just some part? So Linda, why don't you help us on some of that information?
Yeah, there's a couple issues here. If you go to secinfo.com, they have other filings besides just the pulling and servicing agreement, or even Edgar. You pull up the trust and you look for what's called FWP, which is a free writing. So they have in there lists of the loans that are in that particular trust. So you could use this as a lead. You either go by the address, the zip code, the amount that was, or the loan ID number. The loan ID number, sometimes servicers change that, so that's the least likely to work. Zip code is the best, and then you can find a loan that meets with your loan, and you have a pretty good idea that was where your loan was supposed to go. Now, in the tranches, when it's put in and put into tranches, you will see that several of the tranches are paid off. I had the opportunity to go to Bloomberg with someone who was using the Bloomberg for loan identification, and it was clarified to me that did not mean that the loans were paid off. It meant that the investors who had invested in that particular tranche collected their insurance when it was no longer bringing in money. See, there's an investor's insurance, the NIMS insurance. So they're guaranteed to get their money. What they invested, no tagged on interest, but just their money back. And there are so many insurances named in the PSA, and we don't know other than that some of these have a time frame of 180 days after default. A phone call is made to the general insurer, and the amounts are put into that trust fund. I think we can't find this usually because, from my research, the holding companies are the ones who are doing the big-time insuring. I also suspect the holding companies are holding and keeping the money from the, quote, trial modifications.
So, okay, that was a pretty complicated answer, and I'm not sure I can simplify that. But basically, there are other ways that you can attack via Google search engines. You mentioned Edgar and you mentioned zip code. And you mentioned that there are several insurance companies that would pay, basically they pay back principal, right?
Well, some of them pay the general ones on that I've seen by Magic. I have a copy of an actual policy. At least each mortgage, the amount of the mortgage and the amount insured, and they go from like 30% of the original value up to 80% of the original value of the mortgage. And this document lists how much at default will be paid for that insurance, for that mortgage that defaults.
Right.
But then there's so many. There's no amount to the ones they can have, and there's other insurance at 100% of the value that are held by the holding company, and you can ask from now till doomsday, and you won't be able to get that information because it's not recorded in the normal manner. There's special forms for that. It doesn't come under the IRS usual reporting.
Right. And so as we would probably expect, the banks will try to make sure they get paid off and they don't care about anybody else. Okay, another question. She sent, I'm sorry, the QWR is a qualified written request letter to Everhome Mortgage, and she got no response. She called Everhome, and they said they aren't paying anyone, just servicing the loan. And evidently this person brought up Fannie Mae. So this person must have discovered that the loan was owned by Fannie Mae. And so she asked Everhome if they pay Fannie Mae, and the lady there said no. So round in circles they went. So she wants to know, does Everhome just keep her payments, or is some of that money going to the person that owns the loan? What do you say to that?
First, what I see for Everhome is LIE, lie. I mean, what does the servicer do? It collects the money and disperses the money. And for them to say they aren't paying anybody is ridiculous. As her first option, line of defense, Fannie Mae on its website has the Fannie Mae loan lookup. You put in your information and it will tell you if Fannie Mae has indeed purchased that loan and has it in a Fannie Mae pool.
Okay, now, is that the same link as finding out if your loan is owned by Fannie Mae? I have that link on my website.
Yes, that's it.
Okay, so you go in there and you see the loan. And so basically, if the loan shows up in Fannie Mae, regardless of what answer a stupid servicer says on the phone, they're collecting the payment, but the principal and interest goes to Fannie Mae, right?
Correct.
All right. So they're actually...
Oh, not really. That's what we would... There's different payments. There's two sets of books. The second set of book is what they pay out. They pay X to the investors. They pay so much to the custodian. They pay so much to the trustee, so much to themselves as servicers and any sub-servicers and any other fees. So the money doesn't really go to your credit your loan. It's used to pay expenses.
So did I hear you right? You're saying that her payments aren't really going to her loan?
Nobody's really do.
Say that again? So are you telling... Okay. We're not even sure that this person is in default. I'm getting questions from everybody, whether they're in default or not.
It doesn't matter if they're in default or not. The principle is just the same. I mean, there were issues about disclosure when the Dodd-Frank Act was passed, and the banks were so up in arms because they didn't want to have to disclose their second set of books, which tells exactly what happens to the money. What they send us in the form of statements, okay, we see so much from you this month, X goes to principal, X goes to interest, and that's it. But where the money really does go is to pay these other entities, and it's specified in the pooling and servicing agreements.
Oh my! So what I think I heard you say is that loan payments are simply given. It's simply a reflected on the next mortgage statement, which is just what it should look like, but not what it does look like.
Right.
So how does it, here's another question that I didn't even write down, sorry. Because I've got these questions, these people are asking me, and I'm just completely overwhelmed. And one question is, okay, I'm totally current. I want to pay off my loan. how does this person know that if she sends, let's say the balance is 100 grand. So if she sends 100 grand to somebody, how does she know it's going to pay off her loan? Especially if you're telling me right here that the payments don't really go to as we think.
That's what adds to part of the confusion. We had about a year and a half ago a homeowner in Florida who had paid off their mortgage, but it didn't get credit to the right entity, and guess what? They foreclosed on her home.
So she paid the loan and then lost it to foreclosure.
Yes.
Well, see, this is like completely okay. My response to that, and this is my personal opinion, I believe that if this is true, this is so incredibly mucked up that nobody should be making any loan payments anymore. Everybody should immediately file a lawsuit to force the bank to tell them who's getting the money and stop the loan payments. Why are they making payments if it's not going to your loan?
Well, the problem is when it becomes securitized in the trust, their accounting standards are not the same as a normal bank. It goes by the FABS 140. So unless we have knowledge of that and ask for those particular things, we don't get the discovery that we're asking for. And at the very least, this homeowner ought to pursue not having a response to the QWR. That's a federal issue that they could attack in state court, or federal court, excuse me, and could get some money damages up for. But they have to have it documented that they wrote it, certified, and that there was no response.
And the response is supposed to be now 20 days, right?
Yes, and it's
30 days.
20 or 30. The 30 has to be the complete response and the answer to it. They have to acknowledge within 5 days.
And so could somebody take that into a small claims court for a claim? Do you know?
I don't know. That's a good question. I don't know the answer to that. I heard there are some who are doing this, but I don't know the answer.
All right. That might be something to think about. And I'm thinking of Renee, who's working on that. All right.
Lorraine was on I'm watching the side comments, and she was talking about her documents. I mean, it's a known fact that they're supposed to take your original file with your original documents called the collateral file. And at closing, these collateral files are supposed to pass to the trustee and either go directly to the custodian bank where they're supposed to be stored, our original documents. And there's even a section of the pooling and servicing agreement that has a form that is to be filled out if you're requesting those documents for foreclosure or bankruptcy. I've yet to see anybody have used that form to get the documents because they're treating all these documents like e-filings, imaging them, and destroying the originals. And I personally met the gentleman who put together the MERS program for e-filing. And he said when they initiated it, he named the bank where he sat as they were going over the program, that they were literally scanning, shredding, including the notes. So the chances of the real note ever appearing are like zero.
This is truly an amazing witness that this is what has actually been happening, and we know this. We just have to somehow get a grip on this information so that we can keep the houses, that we can stop these foreclosures, and at least stop the theft of our homes. And that form, you said that you have access to that form. What was it called again?
It's a request for a document request for the release of documents. I can later on today email you one from one of the trusts, but sometimes they're accessible online, sometimes they're not. But the few that I found, I can print out and show you. It's standard.
Okay, all right. Because what we're trying to do is, build a workable defense, and any kind of forms and documents that legitimize the request from the people. Those are powerful. Okay, one last question, and then we'll have to call a halt to it. Question 5. Okay, this person was listening last week when Neil Garfield talked about the wire transfer and receiving the transfer receipt from escrow and getting that from the title company to show that the money, where it came from, and that the lender was different. In that case, And like Joe showed out on Friday, you know, Countrywide's the lender, but it's New York Bank that it sent the money and got the money back. So in his case, he's trying to get that information. And he says, my title companies are closed and declared bankruptcy, Financial Title Company and Alliance Title. Any thoughts on how to retrieve that wire transfer information?
Yeah, there again goes back to what I referred to earlier. I've seen what happens. Look at the bankruptcy filings, and those are public knowledge. Find out which bankruptcy court each of these title companies has filed in, and contact the person or entity that is, until the bankruptcy is complete, they still hold the documents. Contact them and ask them for a certified copy.
Now, if the bankruptcy is complete, then shouldn't those documents be with somebody else?
I don't know where to direct you after that point, because this gentleman specifically told us that his office was closing in 3 weeks, and I don't know where they were going from there. He did not know where the documents were going from there. I do know, however, there are several bankruptcy cases where the bank has asked for the documents to be shredded because they couldn't maintain the cost of keeping the files in storage.
And now, see, I believe in California, and I apologize, I'm not even sure which state this came from. Sometimes I don't even source a state because these are just from email addresses and they don't say. But the fact is that in California, these documents are supposed to be kept, I believe, like for 7 years. And if a title company goes bankrupt, shuts its doors, some other title company has to step up and take over the authorization, you know, keep those, store them, use them, have them available for access. It may cost, I really don't know. And like you said, go to the bankruptcy documents and see if it's closed and see where it might go. They, you know, there's probably, with that, who oversees the title companies? Do we, let me try to find out. I should know.
Insurance?
Maybe the Department of Insurance would oversee title companies, and a call to the Commissioner of Insurance might be able to tell you where to go to find this.
Right. An interesting thing that this gentleman was very glad that he followed this is that in the certified documents he received from that bankrupt entity, it showed that there were 3 different sets of documents submitted for closing, and the one he signed, which was a straight interest, did not go through, and somebody had forged his signature on an adjustable rate.
Well, and that sounds exactly like what we just saw with Marcy Captor on, she said in 2011 that when investigators had gone into a lender, when they closed the doors, they found all kinds of signatures snipped, you know, snipped signatures taped onto other documents. And this is the insanity. They've been fraudulent from the beginning, cheating and using the owners and their homes as victims in a financial fraud. That's so amazing. Anything else, Linda, you want to pass on to people as they try to fight back on their own? And then we're going to call it the end of the show today.
Well, I just think, I know you and I are trying to find help for people pro se and people who need attorneys. And first of all, I think our battle is to get the standing in court to be able to proceed. And I know you're developing some ways to help the people, so just hang on, people. It is coming through.
We're working as fast as we can, and unfortunately sometimes I feel like I'm just trying to swim in mud chest high, trying to push our way through. But you know, things are happening, and we so appreciate everyone following us on live stream. Join in the fight, and truly that is going to be the name of the game. As we join together, united we stand, and we can and will bring these banksters to justice. With that, I'd like to close. We're going to hear our famous exit song. Thank you, Linda, and we'll see everybody tomorrow.
term is bent and the money's all spent. We're measured from every direction.
The workers get taxed while the wealthy relax.
With nary a moment's reflection.
Where there's brass, there's muck,
And they don't give an arse, 'cause they're programmed against insurrection. And I say, bugger the bankers and politicians. Bugger the bureaucrats too. Bugger the buggers who make up the rules. And if you're one of them, bugger you. And if you're one of them, bugger you.
Now all you good people with passion to vent, don't give up the struggle for justice. But I've done my time on the protesters' line, and these days I show my dissent.